Welcome everybody, and thank you very much for joining the latest BankBI webinar. It's part of our ongoing CFO Insight series. So for those of you who've been able to join us before, you'll be familiar with the format. For those of you who haven't, then I'll be shortly taking you through a little overview of how we're going to run this session, some of the interaction that you can have with it, and do the introductions for you. So we're just going to give it a moment whilst we get some of our other attendees joining us. So bear with me whilst we do that. It should just be starting in around 30 seconds. Now, for the eagle-eyed amongst you, you will be no doubt noticing that there is a new feature which GoToWebinar has blessed us with, which is a voice-to-text transcription of what we're saying, which we are appearing underneath the presentation slides as we go along. It's a new feature, so we're not quite sure how it's going to work, if it's going to work out, but hopefully it'll be useful, and we'll appreciate your feedback once we finish the sessions. So I think with that, I'd just like to welcome you to today's webinar. As I say, my name is Connor Blake. I'm Director of Business Development for BankBI. I'll be your host for today's session, and that's alongside Graham Goebel, who is our BankBI CEO and founder of the business. So we both really appreciate you taking your time out of your day to join us. For those of you, as I say, who've joining us for the first time, you can actually access recordings of the other webinars in the series. You'll be getting this presentation, so I'll include the links to that, so you'll be able to download those or view those online whenever you want. There are a few housekeeping items just to clarify. So there's a lot of attendees on today's session, so I'm going to keep everybody muted during the session, but if you do have any questions, if you could just make sure that you can please make a note of them, or just submit them using the control panel. So there'll be an area within your webinar controls that will allow you to put some chats in or ask any questions that you like. So we're going to have a chance to cover off questions in the Q&A session at the end. Now, if we, for any reason, run out of time to cover those, we'll make a note of all the questions, and when we send out the follow-up information, we'll give you our written response to those questions. So with that, I'd just like to move on to get into the content of the presentation. So what we've been doing at BankBI is we've been taking feedback from our customers and also keeping a view on what's happening out there in the market at the moment. And we've come up with a summary of what we believe to be a broad description of the management decision framework that we see being executed within the banks, credit unions, and microfinance businesses that we serve. Now, I would say that the emergency mode everybody is very familiar with at the moment. That's really been about keeping the essential banking services open, making sure staff can work remotely, and also including that you're just really trying to make sure that your digital and mobile channels are able to cope with increased demand from the customers. So the focus at the moment is clearly on cost and change freezes, and that's while the business is trying to assess the impact of all these different variables that are coming out of the current events. So some examples there would be in some more extreme cases. That means all approved projects that have not yet been started have been indefinitely postponed, or in progress projects being paused unless they materially impact clients. So some of you may well see yourself on some sort of continuum there. We see that there's been an impact on, as a result, on finance projects, although that we see that situation starting to evolve. In our case, as BankBI, like anybody else, we've been affected by the current situation, but being a cloud native business, we've been able to transition to a full virtual office and do that quite seamlessly. So I'm pleased to say that we've got all our staff healthy and well and working hard on developing new features or otherwise delivering on client projects remotely. So in the next phase, and I think we'll see this developing over the next 12 weeks or so, between June and September, we think the focus is going to be on agile strategic planning. What that means is starting projects that support cost optimization initiatives or strategic cost cutting. We see most of the businesses that we work with are rolling out new credit policies, and the focus is on trying to measure their impact. We also expect operational delivery of services and support to customers' employees to be tweaked and to make those more sustainable in the medium to long term. So there's a review I see happening in there just to see how long is the situation going to go on for, and to make that the decisions that were made in emergency mode a little bit more sustainable and livable over the next 12 weeks. And I think finally on this point, we see the agile strategic planning modes coming to the fore here. So I would say that's between the next 3 and 6 months, where there's going to be a period of enabling business leaders to be more agile, and that's so that you can increase your speed to results. And the nature of that challenge, I think, means that the focus is going to fall into naturally onto cloud options for remote delivery. The sorts of projects that are going to be able to be taken up are going to be within the Opex side of life, and overall just being able to de-risk decisions. So working with vendors and suppliers who are able to assist in that process. So what are the responses to current events that are starting to come under more scrutiny? So there's 3 main components here. We think there's constraints that have been caused by heavily centralized infrastructure and services. So a lot of the banks and businesses that we deal with are facing that sort of situation where everything is centralized on premise. There's also obviously a clear demand to support remote working for employees. And equally, we see a big push towards leveraging decentralized cloud capabilities so that the business can offset probably the risk of the decentralized situation on the premises. So everything changes. One effect of the current events has been to question the suitability of this highly centralized on-premise infrastructure and applications. So a lot of the people on the webinar would already be facing the challenge of supporting this shift to home working, although it is worth recognizing that some parts of the workforce are just not going to be able to work remotely. Those employees who need access to infrastructure that has to be available at work, so that could be branch employees, trading personnel, or employees in the treasury function. So we don't think that will go away entirely, but overall, I believe we're going to see an ongoing pressure to automate manual processes and see IT really challenged to enable greater business ownership of cloud applications from within their business functions. And that includes the Office of the Chief Financial Officer as well. So on to a new normal. Well, what will this mean? I don't think we know right now. I think we've got some clues as things are developing. We're seeing banks and financial services providers starting to examine the emergency measures they put in place. And that's, as I was saying before, was an effort to make those more sustainable. We don't know how long these are going to go on for, so it's really just examining those and making sure the right decisions are being made for sustainability, at least in the medium term. Now, that's going to be all around focusing on the measures and make sure they're designed to get the best out of your people. And also that's going to be at the same time preserving their safety and also the mental and financial well-being. There's a lot of stress and worry out there, so that's also going to be a core part of the thinking that we're seeing. I do think it's worth noting that the impacts of working from home may well have more than just operational repercussions, so I don't want to make it out like it's just operational here. Some of the feedback that we've had would be taking examples of fewer commuters, so that means that cars are going to last longer. Now that could actually slash car sales, new car sales, so that's going to hurt the car financing business. So there's a lot of banks and credit unions depend on that business for major parts of their income. We also see that workers won't necessarily have to move to take a new job in the future, or maybe even now. So for example, looking at the residential real estate market, that could well take a hit or be part of the hit that may be coming up for that. So it is foreseeable that mortgages businesses would take a hit if workers choose to stay where they currently live. And I see also that there could be an impact around new customers and product take-up. So the number one reason why people change banks is that they move. Typically, that seems to be what the general consensus is. But what happens if they stop moving? So if people don't have to relocate for a new job, then that could well have an impact on your customer acquisition and your product take-up as well as a result. So there is, on the other hand, your customer acquisition. That may well actually, or your attrition may actually decline because you have fewer switches. So just in summary on that, I think online and mobile banking may well have started that trend, and I think working from home is only going to cement that further in place. So for our customers and our prospects in banks, credit unions, and microfinance, I think it's going to be about your ability to measure new customer and product take up by channel. That we think was going to come into sharper focus so that you can measure and monitor that situation as it develops. So finally, around strategic agile planning. So that's all about delivering in small increments, so over short time scales, and allowing you to pivot where necessary. So instead of committing to sort of long, inflexible delivery programs whose direction can't easily be altered, you're going to want to keep that agility as a central part of your decision making going forwards. So that's where we see decentralized cloud capabilities being fundamental to achieving those objectives, as well as seeing investment into getting leading indicators within your business that you can then track and monitor continuously, so you can adjust your strategy as market conditions alter. So we have also been commissioning surveys that we take of our customer base and our prospects. So as an example of that, over 2/3 of respondents said that they believe that current events will permanently change how they serve their clients and employees. We also asked whether CFOs believe they have sufficient tools for the job, and for the lucky few, this does actually seem to be the case. But however, the overwhelming majority confirmed that they will be looking for new solutions right now. So BankBI was founded 7 years ago on the belief that cloud native applications are really the most effective way for CFOs and financial institutions to unlock data and to speed up finance automation. I'm going to talk in a bit more detail about this, and Graham obviously will be contributing in a major way to that. But I think now, with that introduction, I would like to move into our first polling question. Now, hopefully you can see on your screen here an introduction to the polling question. I will now be selecting a poll before we launch, but to explain what the poll is, this will appear on your screen, and you'll have three choices on this. So the question is, do senior management have a need for automated daily reporting and analytics for the loan and deposit portfolio? So if they do need automated daily reporting and analytics for your loan and deposit portfolio, that's A. So yes, our current processes are too manual. It's B, if no, you've already have this capability, or C, if it's not applicable or you don't work within a financial institution. So I'm just going to launch that poll now. So that should now be appearing on your screen, and I'll give you around 30 seconds or so to please start to make your choices and make your selections. So we're getting the results in. Thank you very much. I'll just give it a few more seconds. That's great. Well, thank you very much for that. So I'm going to close that poll now. And move on to our next topic. All the results of these polls, by the way, I'm going to be sharing with you afterwards. So Please don't worry about that. You don't have, that'll be part of the overall package that you'll receive. So you have links to all of this information and the recordings. So now, many of you are going to be familiar with BankBI, but for those of you who are new to us, welcome, by the way, and thank you very much for joining us. So I'll briefly just introduce what we do. So BankBI help over 60 financial institutions in 40 countries to automate their finance processes. And the goal there is to help those businesses to make informed, data-driven decisions. We do that primarily by offering 3 key financial performance applications. The first one is financial performance. Using that, we help make your daily financials available to you anytime, anywhere, and on any device. Banking performance, and that's going to be the subject of today's webinar in a bit more detail. That's all about delivering you comprehensive loan and deposit analysis daily. And importantly, we have our regulatory reporting application. So with that regulatory reporting application, we automate the creation of the prudential regulatory reports for the central bank or the regulator. What we effectively do is map your chart of account to the regulator chart of account, and we automate the processes so that the bank can simply select the report dates that you need and then download those from BankBI. So there's no more late reporting or manual workarounds. So our philosophy is really about enabling daily measurement and monitoring of your business so you can make the correct data-driven decisions and take the right choices as your business, for your business as events unfold. So I've talked a bit about the challenges that are being faced in the industry by our customers, by our prospects, and I'd like to talk briefly here just about how BankBI is responding to help our customers and prospects. So firstly, I'd like to invite you to come and have a look around our solution. It's available to you online in a demo form. That's a free, no obligation registration, and it's a great way for you to familiarize yourself with the full extent of the daily reporting available for you in the application. So that's across your financial reporting, so everything from your GL and also in the banking performance. So what we're talking about here around the loan and deposits. We've also waived our professional services fees for projects that are starting between June and September. So that's all about facilitating your cost optimization initiatives and helping you get to where you need to be, because we're very aware of the challenges that you're facing. So reducing the expenditure that you've got at this time and being able to deliver those projects completely remotely. And thirdly, allowing our customers to try before you buy. So once the project has gone live and you have that availability within your business, there's no charge for the first month. So you're able to de-risk that decision. You get to use that, you get to evaluate that, and it's going to give you the confidence to see exactly how that can assist you in your business. If you do decide to then go ahead, your commitment is based on a rolling monthly pay-as-you-go subscription fee. So this responds to what I mentioned before. It's all about keeping the focus on delivering in small increments over short timescales instead of committing to long, inflexible delivery programs whose direction cannot easily be altered. So I think with that introduction, I would like to now hand over to Graham. So if you bear with me one moment, Graham, what I'm going to try to do is allow you to take control of the keyboard and mouse and take over the presentation from this point.
Thank you, Connor. Yeah, it's Graham here, everybody. So what I'm going to do in this section of the presentation is really talk in a little bit more detail about analytics out of the box and how the BankBI strategy is really to provide this analytics out of the box via a pre-packaged performance management application, so that you can effectively move to a daily reporting cycle and really deliver on financial performance automation. So within the BankBI application, what we enable you to do is to consolidate your financial general ledger data and the core banking customer loan and deposit data. and compute a predefined set of metrics like growth, like financial ratios, like return on assets, return on equity, loan yields, cost of funds, and margins. And we can help also in the production and on automation of generating hard copy reports as well in the form of packs like board packs and other management reporting. And this can really enable you to spend less time on the construction of reports and packs and more time devoted to analyzing the information. So to achieve this, we take an automated feed directly from your core banking systems and general ledger systems on a daily basis. We are agnostic as to where that data resides or which core banking system you use or even which GL system you use. And we pull both these sets of data into our application. And this enables us to really do three things. So firstly, we can populate the web application, which can run on any device on a browser, giving you the capability to look at both the financial and the loan deposit portfolio as at last night. And you can do this anytime and anywhere. Secondly, as I said earlier, we can help then in the general automation of management reporting that feeds off of that data. And then thirdly, as Connor talked about, we can do regulatory reporting and we can reconcile all of these different views of the data, both the core, the loan deposit portfolio, back to the GL, back to the regulatory reports that you might be submitting. So having that financial lens through a pre-built application is really paramount to how we deliver this analytics out of the box. So if we just move forward to the next slide. So if we're looking at then how do we actually do this in practice, I think what we can do is drill down a little bit and start looking at the real speed or the value proposition. And the real value proposition for BankBI as a native cloud-based application is all about extracting just the right amount of data to light up our analytics reports and dashboards. We don't want to collect data for the sake of collecting data. So with just a minimum of 22 loan and deposit fields and round about 9 or so customer fields, what we're able to do is take a very small footprint of data and bring that into our application. And it is just by taking those, as I say, 22 loan fields and 9 or so customer fields, we're able to bring that into our application and completely light up a whole, in this case, banking performance application, which is really giving you a detailed loan deposit analysis. And so what we're able to do here is to not only bring in those loans, but we can then break those loans down and deposits down by branch, by product, by loan officer. We can identify new lending, new production, new deposits. We can look at the weighted average rates of that new lending and new deposits. We can do analysis of the loan portfolio by several risk criteria. We can look at non-performing loan analysis by past due day bands. We can look at the portfolio by credit score, by industry, sector, customer type, age range, gender, etc. So really give a very broad view beyond the balance sheet of a product and branch centric view of the data. And as I said, just by picking the right fields from your core systems, we can pull that data in on a daily basis and light up the application. So what does this actually turn into in practice? Well, in practice, what it means is that we are pulling that data every day from your systems on premise, typically. I mean, if you're using cloud-based systems, hosted systems, we can also obviously extract from those cloud-based systems. So we're going into and looking with you at your current extracts, and you may well have loan deposit reports or trial balance reports that we can leverage automatically. We can provide software that runs on premise to help extract that data. We can mask any data or drop any data that is personally identifying customers that we don't need. And where we need an account number to join data together, we can encrypt that. So even where we have keys, if you like, or fields that join customers to customer records, we can ensure that all of that data is encrypted. And so there's no personally identified information being stored in our cloud application. So this piece of the process is relatively straightforward. We need a little bit of commitment from the bank or the credit union to drive this. We need to have access to somebody who understands the financial side of the bank's balance sheet or income statement. And potentially we might need a little bit of resource from IT or MIS to help locate and automate the extract files that we're going to use on an ongoing or daily basis. Once we have that data, it can then be pushed on an automated overnight basis, and it goes into our cloud platform. And in our cloud platform, this is where we have built a very scalable transformation and loading application, and we call this the BankBI Integration Hub. And you can think of this as a place where we ingest your data, where we map your source files if they're in a different format to what we require. We map those into a standard format, and it's a place where we can apply configurable business rules to your data. So where you have, for example, a date of birth of a customer, we can turn that into an age and then put it into an age range. Where you have maturity dates on loans and deposits, we can analyze those maturity bands, those maturity dates in terms of maturity bands. We can calculate the residual maturity period. We can calculate the original maturity period and put it into the appropriate reporting bands. Similarly, for credit scores for clients, if you want to report those within certain ranges, this is where we can define those ranges. And generally, it's the area as well where we map in-house values or source fields to potentially things like regulatory sectors or regulatory customer types or a regulatory chart of accounts. So if you're producing a prudential balance sheet as the output of our process, this is where we would do that mapping from your internal chart of accounts into that. And all of this happens in the cloud. It's all automated, and it sort of bursts on an overnight basis as soon as data arrives, fully automated process to transfer that data. So in that first sector, we're finding the 22 loan fields, we're finding the customer data, and then we're pushing it into the integration hub. And what that does as well is it loads the data directly into the underlying data model, computes the results, and populates the dashboard. So from start to finish, we're talking probably less than 30 minutes to process the data. And again, this is fully automated and established on an overnight basis for all of our clients. So when we talked in this webinar about going from the raw data to the results in 3 days, what did we mean? Well, what we meant is it takes us 3 days effort to work with you to take your extract data, locate it, map it into our product, configure those business rules, which are already defined. So we're not talking about inventing new rules. We're talking about configuring a standard set of rules. And once we've done that, everything that you see, and we will show you in our demo later on in the moment, everything comes to light because of that. So we're really talking about being able to light up an application very, very quickly with minimal investment, both from the bank or the credit union side and also from the BankBI side. And all of this work is deliverable remotely. We don't need to come on premise to do it. We often not, prior to the current pandemic, we obviously did come on premise and help train, but we found everything can now be done remotely and through our team being accessed through remote webinars and conferences. So let's take a look at what this means in practice. What do you get? What's the output? So if we step and do a little bit of a small product tour here, what this enables us to do is to generate and turn that minimum data that we talked about into predefined reports and dashboards. So here is what we call our executive loan dashboard. It's the top section of this dashboard. The dashboard's actually in 3 parts, and we'll show you those parts as a couple of slides here. So the first thing to say is, so all of this comes from those 22 fields that I was talking about. So the first thing we can do is identify data residing within the organizational structure. So at the top, you'll see filters that let us filter on on branches, for example. Secondly, we can take data across multiple time periods. So in this case, we're comparing one month with the previous month, and we can select those months in the filters. Many of you may be working in a multi-currency environment. We can take those multiple currencies and we can report them in any currency. So the system allows you to load a currency exchange rate table into the application so that you could report all currencies, let's say in this case, rolled up into US dollars. And then there is a product hierarchy that we can configure within the application as well. And this typically will align itself to your balance sheet product structure, but we call it product class, product group, and products. And this allows you to define business lines. So you could put business or commercial business in one line, you could put consumer loans in another line, you could put mortgages in another line, you could put agricultural loans, school fee loans, whatever it is, whatever the different product sets according to the market you're in, we can define those easily, which allows you to segment the report to see growth and ratios based on those segments. So what is the report showing us? Well, in the top half, it's giving us a quick summary month on month of our number of customers we have, the number of products those customers have, the number of loan officers that we have within the organization, the average age of our customers, the average age of new customers. So again, all of these metrics can be configured by our clients. So, you know, if this is not particularly relevant to your sector or your market, then other things can be pulled in, which are. Then over on the right-hand side, we're tracking the outstanding loan portfolio, and against that, the weighted average rate. So again, combined with the filters above, we can look at this at a branch by branch basis, or we can look at this at a product level basis, or as we're showing here, consolidated for the whole organization. And the second half of the dashboard lets us then break out that loan portfolio into our new lending. So in this top section here, we're really looking at how many new loans there were in the month, what the total dollar value of those disbursements were, what the average size of those loans were, what was the average rate of those loans compared to the disbursements in the previous month. And then over on the right-hand side, we're tracking new lending and new production, and again, the weighted average rate of that. So obviously, one of the impacts of the current crisis that we're in is that lending is going to be impacted one way or another. And as Connor mentioned, we might well see declines in some loans in some of our customers. You know, quite the opposite is happening, especially in the United States and here in the UK, where there are stimulus packages which are going through banks and credit unions as intermediaries to help shore up companies and lend money to companies to cover payroll costs while staff are furloughed. And so we've seen some pretty massive rises in certainly in the community banking sector in the United States, where those small business administration PPP loans, as they're called, are hitting the books very rapidly in April. And so the ability to see that on a daily basis, ability to see that in the context of what is or has been the normal performance to date over previous months and years is really valuable information to see it, as I said, on a day-by-day basis, and not having to wait until sort of manual processes are run at month end. But of course, what comes with lending is obviously risk, and you know, being able to track those parts of the portfolio which are not performing, and therefore tracking it by past due days is giving us a leading indicator as to, you know, problems we may have in the portfolio or charge-offs or write-offs that we're going to have to make. So the graph at the bottom right here is showing us our outstanding loan portfolio as a chart, but against that we're looking at and tracking, in this case, the past due 30-day band, and the one underneath is the 60-day band as well. So again, within our product, you can have multiple past due bands, and you can track those and see the trends on the graphs. Now, we talked about, you know, within those 22 loan fields, the ability to break information down by things like organizational structure. So branch is obviously key, one of those, and channel. By identifying the loans deposits as being within those branches or channels, we can then immediately start breaking the total numbers down In this case, we're seeing a branch loan analysis. Again, the number of new loans, the dollar value of the loans, the average size of those loans, the weighted average rates of those loans coming onto the books. And then next to it in the middle column is, where is the total portfolio and where is the weighted average rate and the average size of those loans. And then over on the right-hand side, by branch, what proportion of our non-performing loans, both in terms of number and in dollar value, is in any of those individual branches. Now, again, part of the 22 fields would allow us to take that also down through the product hierarchy I talked about. So in this case, we've got a product hierarchy that breaks the figures into business loans, into consumer loans. And within that, what we're able to do then is just take a ranking of performance based on a couple of criteria. So first, ranking the products based on the total dollar value, so we can identify which loans have the highest ranking based on their dollar value. And then secondly, we can rank products in terms of the weighted average rate. So they may not have the highest volume, but they have the highest weighted average rate in terms of the yield that's being generated on that part of the portfolio. And then a similar analysis on the right-hand side is giving us a breakdown. Instead of the total loan portfolio, it's now giving us a breakdown of the new lending in the month, and again by volume and by rate. So it's just giving us a very easy way to see, from a product perspective, what is driving our lending, our loan portfolio, both in terms of volumes and rates. And then finally, taking that on further, one of those 22 fields is to identify the loan officer. So in this case, we're able to do exactly the same thing by loan officer, and in a typical implementation, you'd have the loan officer name on the left-hand side. And again, we can see new lending in this month to date, and again, this is updated daily. So as you track through the month, you can see figures for every single day, and it's giving us this breakdown again of new loans. We can implement targets, both in terms of number of loans and in terms of volumes. So you may have financial budgets that your targets you're trying to reach at a balance sheet and an income statement level, but if you want to translate those into targets at a loan officer and product level and a branch level, then you can do that as well. So in summary then, what we've seen there is taking the fields that we identified, being able to quickly push those into the application, being able to map them into our product very, very quickly through the cloud-based solution. All of these reports immediately are available out of the box. So not just these, but a whole lot more. And I mentioned as well, ability to look at certain risk characteristics of the loan portfolio as well. So here we're just taking a concentration analysis of the loan portfolio by customer type. So over on the left-hand side, we can see what proportion of the portfolio is broken down by different types of customers. And then over on the right-hand side, we're doing a sort of correlation to the past due days greater than 60 days to see, okay, if 96% of our lending is to personal customers, what proportion of our portfolio at risk is in that same category. And so again, risk criteria, it may be maturity band, it may be looking at credit score, gender, customer type, industry sector. We can apply any of these attributes to breaking down the portfolio. And everything I'm showing you on the loan side, we can do on the deposit or share side as well. So again, if we're looking at new deposits and liquidity is the issue, we can again look at that through the same product hierarchy, through the same branch structure, and through some of the same customer or member attributes. So I think it's over to you, Connor, now for the next polling question.
It is indeed, yes. Thanks very much, Graham. That's great. So yes, everybody, it's time for another poll here. So shortly I'll be launching the poll. It's the same procedure as we did last time. The question is, which I'm introducing here, is a simple one. Is liquidity or lending your current main concern? So A, if it's mainly lending, B, if it's mainly deposits, C, if it's both, or if you're not in a financial institution or it's not applicable, then D. So bear with me and I will now launch that poll. So that should be appearing on your screen. So if you could please take the time to make your choices. So it's either mainly lending, mainly deposits, both, or not applicable. And I'll just give you a few more moments to complete those. That's great. Well, I think we've collected sufficient responses. So thank you very much indeed for everybody. Now I will now close that poll. And as I mentioned before, I'll certainly be sharing all these results after the webinar. So I think at this stage, for those of you, as I mentioned before, who are not too familiar with BankBI, or those who are, and I just thought it'd be useful to have a quick refresh on what we do here. So BankBI is 100% focused on empowering finance to push information across the organization. I think you can see from the depth of the applications and also the speed of the applications that's really where we've been refining that over the last 7 years. So we have a simple mission here really, which is to reduce the pressure on finance professionals. And the main target is to remove manual work from your day and just to give you that access to information to help you work more effectively. And that's on any device, anytime. So the software as a service model is now being used by about 60 customers in over 40 countries. So I believe it's a testament to the value that we've been providing over that time. And we do continue to invest to help our clients into the future with a very active roadmap. Just a few examples there over the world of where we've been helping. So really the key information here is that we work with banks in a number of different markets. So that's in major markets as well as developing markets. We also work with the credit unions in the US and North America and microfinance institutions globally as well. And we have some of the largest microfinance groups that are out there where we would support in a consolidated way all of their activities worldwide. So I think at this stage, Graham, probably, if you wouldn't mind to perhaps go in to give us an example of a couple of the customer cases that we have got, I think starting with this UK bank.
Yes, so we picked a couple of case studies. I think it's always useful to refer to customers actually using our product and how they're using it. So we have a UK bank here, which is a high street name, if you like, one of the smaller banks in the UK. And they use our system and have used it for many years to basically to monitor daily liquidity across their branch network. So it's the go-to place for branch managers and finance department to go and see on a daily basis whether they're on target, specifically around deposit taking and the liquidity of the bank. So you know, that was a requirement prior to the pandemic, as this bank has transitioned, as many of you will be, into staff working from home. It's really reinforced the value of the cloud-based solution. There was no need to provision any additional services or connectivity to access this solution because we're already cloud-based, cloud-enabled, browser-based application running on any device. So whether they were accessing it from an office or a branch previously, now accessing it from home, it didn't really make any difference to us or to them in terms of that capability. So again, just one example of a bank that was already using us on a daily basis, and kind of the current situation has reinforced the value proposition there. The second use case, if you could just move forward, Connor, to the next slide, please, is Vision Fund International. And Vision Fund International is a microfinance organization. It's the microfinance lending arm of World Vision, the largest children's charity in the world. And they operate in 32 countries, primarily to basically raise children out of poverty. And they do that on the Vision Fund side by making microfinance loans mainly to women and to other groups that, as I say, that has a direct impact on helping to raise children out of poverty. So in their case, they use BankBI across all of those countries at both financial consolidation level as well as the loan portfolio level. So they're getting information on a minimum of monthly basis, but in many cases daily and weekly basis of that loan portfolio. So a couple of things have happened because of the pandemic and the crisis. So firstly, many countries have taken the decision to reschedule loans kind of unilaterally in a country for the microfinance customers. So in that case, rescheduling of loans and pushing them out maybe 3 months has resulted in a total rescheduling of the portfolio and a need to do that, measure that, and monitor that, and understand the impact of that. The other thing that's occurred is that obviously country by country, there's a difference in the way those countries are either reacting to the pandemic or the timeline that they are on in terms of the pandemic. So the ability to monitor, for example, loan disbursements on a daily basis has become very necessary across this organization. They want to see whether lending has been impacted significantly because of the pandemic. So again, we were already in a position to consolidate that data, and what they're doing now is accelerating the speed with which they push that data into the BankBI solution to give them more immediate access to daily. And that's the goal, is to get to daily across their entire network. And I think we're probably, we're some way towards that, but there are still some countries where we've got to move them off a monthly cycle and onto a daily cycle. But those are just two examples, I think, where they were already customers, and the pandemic has created new requirements which we've responded to, and we're working with those customers to utilize the application to drive more benefits from the investment they've made in using our product. Okay, I think back to you now, Connor.
That's great. Yeah, thanks very much, Graham. Yeah, and of course, if anybody would like to hear more about what we're doing with other customers elsewhere, then just let us know. So now we're on to our third and final polling question again. So same procedure as before, please. This question is, when do you expect to come out of cost freeze mode and approve new projects? So that goes back to that management time frame, really. So if you've been in cost freeze and emergency mode, do you think that's going to change between June and September? If so, that's A. If you think it's going to be further out than that, it's going to be from October to December, then it's B. If you don't really know, you're still not decided, that's C. Or it's D if that's not applicable to you, or you're not within a financial institution. So if you just bear with me one moment now, I will launch the poll and give you 30 seconds or so to please give us your answers. So it's A for June, September for investments. October to December is B. If you're not sure, it's C, or D, it's not applicable, or you don't work in a financial institution. So I'm getting some results in, thank you. And I'll just give it a couple more seconds. Okay, so I think now we've collected enough results, so I'm going to close that poll now and just move on towards the final section and heading towards our Q&A. And hopefully, for the people that have submitted questions, we can then cover those off. So just as a final reminder, from a commercial perspective, how are we reacting? How are we making it possible for banks to make decisions, and credit unions or microfinance? The focus is on operational expenses and agility, and enabling you to de-risk those decisions. So as a recap, we are making an offer to waive our professional services fees for 6 of the first projects between June and September. Those resources are already assigned and will be available on a first come, first served basis. As I say, once that project goes through and you're up and running and you're live, you get a month for a free use of that and evaluation of that application. So it's effectively try before you buy. And then again, with an effort to help you de-risk that situation and recognizing that you don't want to be necessarily committing to very long-term contracts at this stage, we're offering a 30-day rolling SaaS license fee for those customers. And of course, anyone who wants to know more about that, then you'll have all my details at the end of this. And I think now just to move into the Q&A section. So if you bear with me, I'm just going to look through some of the questions that we've had submitted. So if you bear with me one moment. So in fact, Graham, I think this is probably a good one for you, if you don't mind. So our first question is, in your 3 days to set up loan and deposit analysis, how much effort is required by the bank and what type of resources do you need?
Yeah, so I guess we need a little bit of help in establishing the right extract files. So typically we can bring in somebody from IT or MRAS who can deliver those extracts. What we find in most organizations is that lists of loans and deposits exist already for other reporting purposes. So it's really about leveraging an extract or a report that has those 22 fields on it that we can find. So that's the first part of the requirement. Second part is obviously once we've configured that and brought that into the application, there's a requirement to spend a day or so reviewing the results and reconciling those results. But that really sort of merges into end user training. So pretty much it's pretty straightforward. Find the data and then really consume it and really go through a sign-off process to sign it off. So no more than a few days in total, with, as we said, 3 days from our side in effort in putting it all into place.
That's great. Thanks very much, Graham. So I'm just looking through the list here. So there's quite a few questions. I think some of these we're going to have to leave to follow up in writing. But if I pick another one, which I think is a follow-up to that one, you showed many reports on your menu. Are they all populated from the loan and deposit fields that you showed?
Yes. So again, we're very clear. We identify just the minimum fields that we need in the application, no more, no less. And as long as we get those, then everything that we showed you or everything you see is populated from that minimum field set. Okay,
thank you very much. I think we've got time for just one third and last question for the webinar. And again, I'll follow up with the other questions. I'm sorry we haven't been able to get to all the questions today. But the third question is how can I review your application or share it with my colleagues?
Yeah, I think you mentioned this earlier. We have a free to use, no obligation demonstration system, and that has a full financial history, so balance sheet, income statement, financial ratios, as well as a full loan deposit portfolio by multiple branches, product sets, loan officers. So it's a very good representative solution in terms of demo. And as I say, no obligation, free to use. You don't need to download any software. It's a browser-based application, will run on any device, and you're free then to show it and share it with your colleagues, or even have them be signed up into the demonstration system as well. So we're very open and transparent with our application. We like people to try before they buy, and this is all part of the ethos of showing you what we've got and how straightforward it is to get it implemented.
That's great. Well, I think just to respect everybody's time, as I say, we're going to move on now. For those, unfortunately, haven't been able to answer today, we're going to give you a follow-up in writing to that and share that with the group as well. So I think it just leaves it now to talk about next steps. So the first step is a suggestion, and as Graham was saying, you're able to register for free to our demo system. So please just get in touch and we'll set that up for you, and you'll automatically receive your credentials and be able to access that and share that with your colleagues. And the second one is if you would like to have a guided tour around that system, then just get in touch with me and I'll be able to quite happily arrange for a session where I can just guide you around that and answer questions that may be relevant for you. Or alternatively, if you wanted to set up a meeting to discuss a specific project scope that you may have in mind at the moment, or you'd like to take up our offer of the waived professional services fees and the try before you buy option for the loan and deposit portfolio analysis, then please book a meeting with me as well, and I will get you into that system. So I think that all that remains now is on behalf of Graham and myself and the wider BankBI team is to thank you very much indeed for attending the webinar today. I know your time is extremely valuable and we very much appreciate you joining us. I will follow up with the webinar recording and all the supporting material as well as the results from the polls. But on that note, thank you again for joining, and we look forward to you joining our next polls and our next webinars. Thank you very much indeed. Goodbye, everybody.